Yeah. No, that's good to hear. We see three things. There is this, first of all, let's talk about our SMBs, small to medium-sized businesses. The threat level has gone up pretty significant over the last 2 months. You're talking about phishing, 600-700% month over month. You talk about DDoS attacks on government facilities, ransom for handhelds. There are about 1,200 plus cases. I think I may have seen that in your write-up somewhere at the FBI's IC3 related to COVID. There are apps that would lock your phones, and until the victim has to allow paying certain cryptocurrency, it wouldn't release. So the threat level has gone up on top of existing disruption in the business. The agencies, retail agencies, this business is 150-year-old, built on relationship, networking, oxytocin, in person, and all of a sudden that got replaced. So first 2 weeks, everyone was hoping this would be over soon.
Yeah.
And now you have to really realize, how do I change the business model? So we label this O2O, offline to online initiative. How do I build what was happening offline to everything online, including maintaining relationship, communicating crystal clear,
right,
submitting, binding, issuing policies, servicing the policies, performing claims. So we feel like we're well positioned there. And third, there is this new surge in wholesalers' gravitation from surplus to admitted, right? And possibly merely for compliance reason, but also there's one less thing for them to worry about is to review every surplus quote. But if it's an admitted product, right? So we start to see those three things from agency retail, agency wholesale, and the actual prospective customers. So we started the offline to online initiative for the agencies. We opened up the platform to all non-policy holders, so any small to medium size business can come in and take a look at. We also see a rise in private convertible notes as opposed to price funding rounds, right? In terms of just a backing. What we haven't seen is any hesitation on the reinsurance part for cyber. It seems cyber is insulated from the reinsurance capital.
Were you expecting that?
I wasn't expecting a recess on it. I just wasn't sure. But we actually seen reaffirmed commitments. And, I'm not talking about existing, but I'm talking about things in the pipeline. The reason I'm describing it like, the first half of the hourglass is the policyholder and agencies. There's kind of a rising threat level and a different way of doing business. And the second part of the hourglass is the reinsurers, capital, and of course, the regulators are working from home, so there is a productivity issue there. Your filings are not getting approved as fast as you would hope to be, right? But yeah, it was. That's good news that cyber is reinsurance capital for cyber is there's COVID-19 task forces at every reinsurer, right?
Yeah.
Assessing, what's the right and what could be the cyber, right? So I think those are, we're live in 5 states now, Nick. It's been great.
Which 5?
So the initial 6 minus California. We're still waiting patiently on California to go live, hopefully by beginning of next month. It's Arizona, Colorado, Nevada, Oregon, and Illinois. And one thing we done as part of our adjustment to COVID-19 is we are accelerating our state rollouts, right? So the next 9, we already in the process of filing, and we like to get the 15 done by end of May, go to market on 6/1.
Did you say 15?
Yeah,
So
15.
that's fantastic. By the way,
Yeah.
we're recording.
Oh yeah, I see that. Yeah, it's all good. Yeah.
Yeah. No, this is a good conversation to
Yeah.
have. So, what I'm curious if you're seeing the same thing I'm seeing. So, I would classify cyber as potentially catastrophic business wise, and the way that it can kind of, we're in a pandemic. It's got viral qualities to what can potentially happen. I'm on the NatCat side, and I'm now getting asked more and more about business interruption.
Yeah.
And my guess is that there's going to be a you described the O to O and how I feel as though there's a lot of discussion about the business model in its entirety. And thus, even though we are in a pandemic and there's a lot of questions about business interruption when it comes to pandemic coverage, I'm thinking that in the corporate boards and the risk management discussions, there's just a conversation about business interruption across the board, whether it's caused by cyber or natural catastrophes. There's just a desire in around businesses to close that gap, regardless of where it's coming from. Are you sort of seeing the same thing?
Yeah, well, we saw, look, we gone to Illinois 4 and 5 weeks ago. We launched in Illinois, and that was the first week. The entire Chicago and suburbs were shut down.
Yeah.
And they were very busy filing BI claims against the general liability and the commercial property policies.
Correct. Yeah.
So look, I would continue to say BI and also ransomware, but the resulting BI because of ransomware, or just BI in general. Social engineering because of what's happening. No matter what kind of pandemic you have, social engineering is going to be materially. So I see these top 3, 4 coverages that are going to pick up pretty broadly. I do see a gravitation from folks to understand what type of business interruption against what policy. So you check your coverages, right? Do I have enough ransomware coverage? Do I have enough? So I think what will that do, though? That will keep moving the needle towards need for standalone and admitted product more and more, right? That is our feeling. Do I believe long-term there's an opportunity for parametric where somebody just covers PI no matter what peril you have? It requires a lot of, especially just look at in cyber, single point of failure, the aggregation stuff. Those things need to be more stabilized before you can think about a parametric that includes cyber as a peril, right? I agree with you. There's definitely a conversation on BI. But, people were buying cyber for contractual out of fear. And as they expand the business model so they can protect themselves, partnership, commercial. And now you can add the business interruption. I mean, you have a public health pandemic, right? Cyber pandemic could look very different, right? So I think, BI, whether it's a, will this change the product that insurers offer? I think a lot of lessons to pick up. I mean, I can't say it's too early to say, would people still ask for higher limit on BI? I think most BI limits is all the way to aggregate limit anyway, right? So, yeah, so that's kind of my thoughts on it. I don't know if it got, it conveyed everything you wanted to know, but yeah.
Yeah. So you brought up the admitted
Mm.
element of it.
Yeah.
Typically for, let's say, auto, the way an admitted filing works is, a carrier has some loss experience. They do the actuarial analysis in order to, segment the market the way that they view it, get to a particular rate, and then, it's essentially now for a broker or agent, when someone comes in and wants to buy auto insurance, they plug in some information, it goes through a rater, and it says, okay, you're in this zip code with these characteristics, here's your rate.
Yeah.
What is the admitted process for cyber?
Yeah.
Because that process, that's not just auto, that's auto, homeowners, small business, like most of the traditional insurance products function that way.
Yeah.
What is it with cyber, and how were the interactions
Yeah.
with the regulators regarding how you are filing these rates?
Yeah. So really good point. Like, a lot of all the lines you mentioned, they're usually based on the industry class and the revenue. If it's commercial, if it is non-commercial, you have the cost of dwelling, the MSRP of a car,
Yep.
and those became the right. Now you have like 150 year of actuarial tables and heat maps to get to finesse that data. Cyber, not only you don't have those actuarial tables and the heat maps available to you, the information is also changing very rapidly.
Right.
Right? That's the big challenge. So you couldn't really apply that model. So I would even say the law of large number is not as applicable to cyber as you might find it for other line of business. You can't just write too many cyber accounts and not worry about risk aggregation and single point of failure. You can have a significant loss in even a very large uh, pool of claim accounts or policyholder because you have a catastrophic single point of failure. The way we are looking at it is we have, I think to date, we have about 267 data points about an account. So we write certain degree. There's a, you will see traditional insurers are still using industry and revenue to write cyber to a maximum degree, and maybe single factor cyber score from a cyber security supplier. What we do is we rely on the revenue, employee count, industry class to a very small extent, because that's kind of we call it a firmographic. You just have to know enough about the company. But then we pull up all these 267 different data points. That is, by the way, you have it at your fingertips. You don't even need to ask them all of those details.
And
And
that's 267 points above and beyond the traditional
yeah,
classification and just, how many employees, what's your revenue. This is, you're whittling down more to the specifics about exposure and risk.
yeah, and then we convert that into multivariate ratings factor called Cowbell Factors. So exactly. So essentially, what happening is, Nick, we are writing cyber not only on industry and revenue, but also on risk exposure, as opposed to, and that is what is a big delta, big differentiator. You truly know the type of, now you can classify the single point of failure. You can aggregate it the way you look at it. You can manage a premium to limit ratio. You can write portfolio into certain industries to certain extent, and then,
Yeah.
right? So Yeah, that's a big deal for us.
Yeah, that's it reminds me of where the property business was moving as well, because again, the classifications by zip code, I do flood on a day-to-day basis, and the risk can vary dramatically in a single zip code. So
Yeah.
an average rate will have a wide variance, and that allows a smart underwriting team to go in and kind of poach out the stuff that doesn't belong in there.
Yeah.
It's at the average rate, you can get the lower ones and kind of remove those out. So that's really smart. Any pushback from regulators? It's a different
You know,
approach.
it's limited time uh, of the experience, but I think we'll know as we file more, but so far, uh, we're writing policies in these 5 states right now, currently. So, yeah, no, I think good questions. We provide better answer. But yeah, it's an amazing experience to. By the way, Nick, I think you and I first talked about a year ago
You did.
in Des Moines, Iowa.
Yep.
And as you know, it was a one-man, 3 slides show at the time, not even funded at the time, right? So, that we moved really fast, and that you couldn't do without a proper support from reinsurance panel, without a quick approvals from insurance regulators.
Yeah.
Uh, so yeah, it was yeah, it's really good experience so far.
So, given the market is still immature, and I mean young, right?
Yep.
The cyber itself has evolved quite a bit over the last few years, but the internet's not that old
Yep.
compared to general property,
Yep.
right? And so um, there have been writers of business. I'm going to ask you the question like I would get asked if I were going to pitch is how are
Yep.
you going to how is Cowbell Cyber going to compete against some of these larger writers of cyber that can potentially they have a big balance sheet,
Mhm.
they can potentially throw armies of
Yep.
researchers
Yep.
and information technology specialists at this. How
Yep.
does Cowbell Cyber compete?
Yeah. So look, I mean, if you had a army of researchers, someone would have done it what we do a long time ago. It requires a cross section. Cross industry innovations don't happen at large companies. You have to know AI, you have to know cybersecurity, you have to know insurance, and you bring and assemble that unique foundational team to solve a very complex problem. So I think the innovation can only happen in a very difficult and a small budget, a finite number of people. That's one part. Second, this is not a business where you throw a lot of bodies at it. In terms of distribution and army, there are people like, most of the world has access to the gang of eight, and I call it the top 8 standard markets that are selling cyber, big ones, right? Everyone in the world has access to those products. But then why it's take up rate, like you said, young market? Why is 91% of small to medium sized businesses still uninsured? There's a reason for it. And the reason is, the people are gravitating to uh, have a very simplified process. People are gravitating to have a just right coverage, and
Hmm.
people are gravitating to get more insights that can help them make decision, right? And I'm talking about the small to medium sized businesses. So unless you solve this trifecta of purchase drivers, the process, the coverage, and the insights, no matter how big and how big you are and how many resources you have, you're not going to cut it. That is why we think that the innovation behind Cowbell Factors is actually driving the process. I mean, And Nick, it takes half day for people to configure cyber product. We activate policy in less than 5 minutes. We have eliminated the application. We have compressed the submission and binding to microsecond, right? So it has to be driven by technology where you don't need, like, look, we in a smallest, less than 20 people and maybe less than $2 million in expense, we build an entire insurance company with a product in the hands of retail agents to sell it to the businesses in like 8 to 9 months. So, I mean, you haven't seen that happening with any large property and casualty insurer trying to build a cyber line of product. So that gives us more confidence, right? This is where we bring the innovation, right? It's not our ego; it's the will, the skill, and then the managing the time to market. And the market is young. It's good because powerful tailwinds here, right? 91% in SMBs are uninsured, and in the first 9%, there are a lot of people are underinsured, right? Yeah. Many people are still doing endorsements on existing BOP and property policies for a cyber endorsement.
Yeah. There's so many similarities between, even though cyber and natural catastrophes are not the same, there's so many similarities. And I think there's like a lot of overlap in how we both view the future of insurance. And you brought something important up was, a lot of your potential customers want insights.
Yeah.
Right. And I don't know about you, but there's something immensely dissatisfying with just selling an insurance policy. Right. We're collecting all of this data.
Yeah.
I know I always feel when I deal with commercial accounts, I think I know more about their building than they know about it.
Yeah.
And so, yeah, it's okay. Should a disaster occur and I can get you back up on your feet, okay, yep, that's socially valuable. But I think there's more value to, like what you said, providing those insights. Like in the risk management sphere, there's before risk transfer, there's risk mitigation and risk prevention. And if I have information that can help you prevent or mitigate loss, why don't I just tie the whole thing together?
Yeah.
I have a feeling you think of it the same way.
Yeah. I also think it, I agree with everything you said. I also, another data point is, we're bringing a transparency into the market that didn't exist for cyber. Right? Single data source, couple principle. The agency should know as much about the policyholder, if not more. Okay. The policyholder or the potential customer should have really good insights into what are the parameters used to define my coverage and my premium, right? And today, those two things don't exist, a black hole, right? So the platform is built on a single data source that is accessed by the policyholder, the agency, and the reinsurers. And that is a pretty big change for the market. So it's not just the policy you're buying, it's a process of buying policy. Yeah. It's the governance. Once the policy is activated, what is the gap in insurability would look like every quarter, every month? So Nick, this allows us to, I go back to the North Star for Cowbell, right? The usage-based cyber, well, not only you can influence or change the premium, but also the limits and coverage based upon the evolving risk. So this is like a risk transfer on the go all the time.
Yeah.
Right? So it's a kind of a 3-year journey for us, right? We're still talking a year into the journey. This will go a long way towards that journey.
Yeah.
Right?
Are there any particular businesses that are essentially uninsurable? We have on the NatCat side there, there could be, single-story structure on the ocean in Florida,
Yeah.
And it's just like it would cost so much to insure that part. Like the devastation is inevitable. It would cost
Yeah.
so much to insure it. It's essentially uninsurable because they're not
Yeah.
going to pay that money. I don't know enough about how cyber insurance actually
Yeah.
relays all that, but do you run into the same things where there's businesses that are
So,
either so sloppy or whatever that they're essentially uninsurable?
yeah. So there are certain industries that you don't write, and that's not an aggregation issue. It's just that, for example, the adult content industry or gambling, right? And that just like in a book of business, you just don't insure them for not just cyber, for a lot of other line of product. But then there are certain industries that are high risk, you may call it, because of just the amount of data. So you think about, I would not call it somebody who is non-insurable. I mean, there's a cost to it, right? Now we have limited experience in the market to really say, hey, we would never write so and so
Mm-hmm.
type of thing. But if you look at CCPA per record, there is a penalty on it. So the number of records go up, you are exposed to much bigger. The revenue, in case of GDPR, it's 5% of your revenue. So the higher the revenue, the higher the
I
exposure
see.
to GDPR. Average ransomware was about 95K last year in the small to medium market. As you go up the market, it goes up.
Mm.
This year, it's going to change. So we are accommodating, to that. I just don't have enough data point to say, we know there are certain industries we don't want to write certain percentage, more than certain percentage of our total portfolio, because we know this high data aggregator, everyone depend on the same cloud provider. So it's a big risk to single point of failure in terms of that. But yeah, there hasn't, I think we're looking at every industry, right? Look, I mean, we want to grow fast as well, but we want to do it without compromising the due diligence that is required to write insurance.
Yeah.
So one thing we saw is a lot of people write just based on domain name. Okay, sure. But hope it's not just domain name. Hope there is a lot of due diligence behind it. Uh, so that is what I'm
Mm-hmm.
talking about, right? So we want to build a sustainable long-term business. It's not just a,
Yeah. There's so much in common because as you're talking, I'm just like, well, we have the same problem.
Yep.
I don't want to write too much business in New Orleans,
Mm-hmm.
flood business. Like you write
Yep.
too much there, you're gonna get caught eventually. So there's a lot of parallels between our two businesses when it comes to that. I'm curious in this potentially new normal that we're going to have, where considerable part of the population is working from home now
Yep.
and could remain working from home. How does that change the cyber exposure for companies that have had to rush in some instances to kind of put together the necessary infrastructure to allow people to work from home? Does
Yep.
this potentially open up holes
Yeah.
for egregious people to get in?
Very significantly. So what was done temporarily has to be done permanently, right? Even if you go back to work, because these practice people have found many different ways to be more productive than being not at the office, right?
Yeah.
Centralized. So temporarily, a lot of things will change. The controls, where what the controls were before are no longer the same control. They're not up to par, and that changes the cyber risk pretty significantly, right? So Cowbell factors go down for certain industries and certain businesses as they start to reflect into the actual data.
Yeah.
So yeah, this changes a lot. This is why when my initial thinking was threat level has gone up, it's not because uh, hackers are working much harder. It's because the infrastructure has become weaker,
Yeah.
right? So that is the big risk. And if you don't have, like you said, risk prevention and risk mitigation, you have to work on risk transfer
Yep.
To a degree. And
Yep.
this is why, this is why my optimism to that 9% take-up rate could to hit 20% in a post-COVID era is giving me more and more optimism that that will actually be the case, because the drivers are the weaker infrastructure, focus on BI, never had cyber. There wasn't a good enough standalone admitted product. The process was cumbersome. I see a good resulting outcome as you cut through all of these problems.
Yeah. The world of the hacker, when something like this occurs in the world that's so disruptive, does it make a hacker salivate? Like, do they realize, like, this is a new opportunity for us, to do what it is that we do? Or do they just keep doing what they do and they're just more successful because, like you said, the infrastructure is weaker?
Yeah, they are. And also people who were not involved in cybercrime, people who are involved in physical crime, they might turn to cybercrime because they can't move around too much. Right?
Interesting.
So yeah, it's profound impact on that.
Yeah.
Very profound impact on that. So
yeah. Is there, you're in your long-term thinking and planning of cyber insurance, do you foresee a situation where it becomes standardized in such a way that it becomes added as a named peril in a policy? Or do you envision that it'll probably stay monoline or as an endorsement somehow for the foreseeable future?
Yeah. If I have to make a bet, if I have to make a bet, it would be monoline for a foreseeable time. Again, we only know cyber. We don't know anything else. That's our specialty. So we'd like to remain monoline as well. A lot of work going on in the government, and especially pre-COVID. I think you heard about the Solarium Commission, possibly. They want to certify insurance products for cyber. They want to certify the underwriters. They want to certify claims adjusters. And this is not certifying cybersecurity products. We're talking about insurance products. So there's a lot of role for us to play in defining those aspects of the business. So we are involved tiny bit in periphery. But yeah, I think it would stay monoline, especially because of it. It needs to be much more standardized before it can have something else happen to it.
My last question is, what's going on with our good friend Trent Cooksley?
Yeah, he's, believe me or not, he's going to office every day. So that's the big thing happening with him.
All alone? Just him?
All alone, just him. He is, I'm fortunate to have two very good co-pilots for distribution in Trent and for product in Rajiv. He's doing amazing. We're beefing up distribution. We're hiring in distribution. Big deal. Need it right now. And we are just so committed to the journey. We all believe that we are building much more resilient business. And we like to tell stories in future that, hey, if you come out of crisis like public health that it was, anything can happen, and we'll be much more resilient business, right?
Yeah.
So that's how we're looking at it. Again, without a lot of optimism, there won't be any entrepreneurship, and there won't be a lot of risk taking. So, we're having fun. We're enjoying. We're at 21 now. We'll be getting to 36 by the end of the year.
You're fantastic.
Yeah. And we'll be at 50 states by the end of the year.
Congratulations.
Yeah, and we'll have...
one final question.
Yep.
When's the last time you had a haircut?
Well, that was March, 7th. And so,
You remember the exact date.
yeah.
So I am proud to say, I need your opinion. I'm gonna put this on the recording. I need your opinion. How did my wife do with mine? She has never cut.
I thought, wow, that is a plus experience there. That's awesome.
I will tell her you said that. Thank you.
Yeah.
Thanks so much, man.
Tell her more cowbells, right? So
always. I'm gonna squeeze some cowbell into this video.
Yeah, beautiful. Thank you, Nick.
So,
Appreciate it.
Appreciate it, Jack. Thanks a
Be
lot.
safe and talk to you soon.
And so, my fellow Americans, ask not what your country can do for you. Ask what you can do for your country.